Good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, May 16th, 2021. To do a quick review of Friday's trade, it produced exactly pretty much in line with what my expectations were, and that the market did rally. The market did rally fairly strong and reached resistance levels that I had anticipated would be reached if indeed this was going to be a fourth wave correction. And if you remember, I've been labeling this as wave 1 or A, wave 2 or B, and wave 3 or C. This one's the more important to kind of keep in mind as to what's going on. If this is a third, then this would be a fourth. And that fourth wave really should have stayed within this boundary. It's now exceeded it. And it's starting to look more impulsive to me rather than corrective. And that's going to turn things around. Now, granted, we're going to have to allow for some additional rally. And that could take us up to this, where wave C, indeed, if this is wave C, would be 1.618 times the length of wave A. And that comes in at 13,502, I believe. That's going to draw that line, dang it. When my computer decides not to be nice to me. That one, give it to me. See, it won't even do it there. I get this one, which is 13,529, which is the level I definitely don't want to see it against. And this is 13,502, as I was suggesting before. So 13,500, we're going to go around, plus or minus a little bit there. And that's where I actually do not want to see that market go above that level, because then it really does, it's no longer a fourth wave. Then we're going to have to go back and consider this an ABC down, and now we're either starting a rally again, or we're in a B wave, which would have expectations to get up higher, probably up into this area versus where I'm thinking it should be here. So again, we need to let the market tell us what's going on. I originally thought, when Goldbex first opened this afternoon, I was wondering, oh yeah, we get a little bit extra, we get up to 28, and suddenly somebody just walked in and popped at about 30 points. Now, I don't know if that was somebody who just really came out of expiration last Friday, way too short, and they just came in and they just covered that. Who knows? But in any case, the market's going to continue to tell us. So if we turn from here and we start to break down below these levels, we get ourselves back below 13,300, then I'm going to be a lot more in line with that this indeed was just a fourth wave and that we are heading back lower. Now, here's the outside of either count. If it's a fourth wave, we're going to be looking for a fifth wave down, followed by an additional rally. If indeed it's a B wave, and this ends up being wave A of a corrective phase, and now we're in wave B of that said corrective phase, then what follows is wave C. So either case, our expectations are for, upon completion, for the market to go down. So it's just going to be now determining from what level that market will flip and then produce an additional five-wave structure down. Now, what would happen to cancel that downside projection and just continue to that we're now going to head back up to new highs, because now we have to flip back over and show a preferred count, which is what I'm working on right now. But the alternate count would be that this is ABC, that corrective phase is complete. We're now heading up again to new highs. And that would kind of put a limit to what we feel this could have completed. If remember, I still have not put that labeling up there because we sit to stay at high levels for if it is only going to be, say, an intermediate wave for correction instead of a cycle wave for correction, the depth is going to be a lot different. And even on an intermediate level, could be that we get a B wave and still do a C wave. So either way, I kind of still expect. So, but the market is going to tell us. If we get back up above 3,600, 3,700, it's no longer, that correction is done and we're heading higher, would be my take. But for tomorrow, I'm going to look for, again, depends on what we do in Globex overnight, but I've got resistance at 13,468, 13,500, 13,529, 13,546, and et cetera, all the way up. So we continue to find our resistance levels as this market to move higher. So it may have trouble getting past all of this and then start this next leg down. But what we'll pay very close attention to is what type of structure is being formed as it comes off. If it's just going to be a shallow retracement, then this is going to be 1, 2, 3, 4, and we're heading higher yet again. So we've got our plan of what we can expect, but we need the market to then tell us which one it's going to be. So right now, if these levels hold and the market starts to break below and starts to work its way lower, back below 13,300, then I'm more in line with that this was corrective. And now we're going to head by putting a 5-wave structure down and then start to look for new lows below 12,911, which we've already seen. And then down to those additional levels that we have discussed previously, and those would be down around as low as 12,700. And maybe even a little bit below would be our next level that we'd be looking at for downside moves. Now, the upside move, if we get up into these upper levels and we start to correct, and that can, and first thing you could do, if you see the correction coming, and before I make an update, then run a Fibonacci from this low to wherever it stops and starts to pull over. That's going to give you the levels that just in the vein of if it was a 4th wave correction, just coming down a little bit versus then doing a 5th wave up. So you're going to get those levels, and your strength would be built stronger if it starts to break those common levels. And let me just take a few of these off, and then I can go and give you some additional. Yeah, we want to get rid of those, right? So these are the ones that we're doing for the C wave. So let's just, for an example, put, I'll leave that up for right now. I'm going to put some Fibonacci's on here, which is going to help us to see. And I'm going to take this all the way up to here. Let's say it gets up this far. So this is just, we don't know yet, but we're just going to say if it does. Okay. So come on, give me a break. Let's just do this, okay? Thank you. We're going to see that it should be working better than that. What we have coming off those levels is our Fibonacci's. Dang it, I've got to get rid of the other one so I can see it more clearly. So let's get rid of that extension so that we can see what we're doing. Okay, great. So we have 382. So you can see if it gets all the way up to that level, 13,000, almost 13,500. It shouldn't pull back all that much. In fact, it should hold above 13,300. So before it then turns around and does an additional wave up. So that's what I'm talking about. And if I take that back off, and I put the other ones back on, and now I'm going to take off that Fibonacci retracement, you can see that we have the 100% here. So if it starts to fall below 13,300 that I'm talking about, then we're going to be more convinced that that completed this little corrective move up. And again, now we're going to start to move back into the corrective move down. So we have our marching orders. Allow the market to tell you what it wants to do. Continue to follow our moving averages. Right now, they're kind of lining up again for the upside. And what I want to now just kind of bring into focus is our near-term charts to show you that right now, that's the 5-minute. It's showing up, although the 4 is gone straight up from there. This one kind of turned, it's a 2-minute chart. The very, very near 4 and the 8, kind of flat to a turn, but here on the 1 minute, lined up to go higher. Basically 2 minute, lined up to go higher. 5 minute, lined up to go higher. Flip over to the next, my hourly chart, getting there. The one that's holding it back is the 200. The 200 still sits at the top of the heap or the top of the pile right now. And so that I've got the others pointing higher. So for all intents and purposes, yes, the hourly is lined up for the market to move higher, but likely limited because they haven't moved up far enough to where the 200 is the one on the bottom. So, but you can see how the 50 has started to move higher, the 20 is moving higher, the 4 and the 8 are all moving higher. So I think that we need to really be very cautious and follow what the market is going to be telling us and actually just trade what's in front of us. Counts are easily adjusted to reflect exactly what the market is telling us what it wants to do. So we now have the alternate, we now have the preferred. Preferred is that it's going to turn and go back down. The alternate's suggesting that we may go up higher, but still drop lower to fulfill the count. Even if it's going to be ABC A and this is ABC B, we still have a C wave down. So either way, we have an alternate and a preferred, which continue to call for once a high or a top is put in here for an additional 5 waves down. What could break that alternate and the preferred to basically negate downside for right now would be a break back above 13,700. When we start getting up here, all this is for naught, and it starts breaking above levels. It really shouldn't. If its process includes another trip down below 12,900. So we'll eventually still get that. I promise you that, but it's going to be put out. It's going to be out until upside is complete and likely new highs are put in place. That's where I'm going to leave for right now. Tomorrow is hopefully going to be another great trading day. We'll have plenty of opportunities. Trade what's in front of you, trade accordingly, and use your moving averages, your Elliott and your Fibonacci to guide you along the path. Next update will be Monday the 17th.